September 15th, 2008. A single company goes bankrupt, and within 48 hours, the entire global financial system is 3 hours away from complete collapse. ATMs would stop working. Your debit card? Useless. And the people who caused it? They made billions. Here's what they don't tell you about 2008. Everyone thinks it was about subprime mortgages and housing. Wrong. It was the greatest con in American history, and it was completely legal. Let me set the scene. It's 2003. You're a banker at Goldman Sachs. The dot-com bubble just popped, interest rates are at rock bottom, and your bonus depends on one thing: making deals. Big deals. But there's a problem. Everyone who should get a mortgage already has one. So what do? You give mortgages to people who absolutely should not have them. No income verification, no job, no assets. Literally called ninja loans. And I'm not exaggerating. There's a case of a guy who put his dog on a mortgage application and got approved. The dog's credit score was probably better than mine, but still. But here's where it gets insane. These banks aren't keeping these terrible loans. They're packaging thousands of them together, getting rating agencies to slap IAAA rating on them, the same rating as US Treasury bonds, and selling them to pension funds, retirement accounts, foreign governments. They're literally gift-wrapping financial grenades and selling them as safety deposits, boxes. Now, 2004 to 2006, housing prices are going vertical, not up, vertical. People are buying houses with no money down, flipping them 6 months later for $100,000 profit. Mortgage brokers are making $10,000 per loan. They're signing up strippers. And I'm not being dramatic here. There's an actual documentary about a stripper in Florida who owned 5 properties. Real estate agents are buying Ferraris. Everyone's getting rich. And the banks? They're not just giving out these mortgages. They're creating something called CDOs, collateralized debt obligations. Think of it like this. Imagine you take 100 terrible mortgages, blend them together like a financial smoothie, and somehow the top layer of that smoothie gets rated as super safe. The banks are selling the top layer to pension funds while keeping the toxic sludge at the bottom. But then, and this is where your brain should start hurting, they take the sludge from multiple CDOs, blend those together, and create a CDO squared. They're making a bad investment out of other bad investments and calling it safe. Michael Burry, this hedge fund guy who figured it out. He's reading through hundreds of these CDOs and realizes something terrifying. Nobody actually knows what's inside these things. The same mortgage is being counted in like 15 different securities. It's financial inception. So he does something crazy. He goes to Goldman Sachs, JP Morgan, all the big banks, and he says, "Let me bet against these mortgages." The banks laugh at him. They think he's an idiot. And they create something special just for him. Credit default swaps. Basically insurance policies that pay out if these mortgages fail. Michael Burry is paying $100 million a year to bet against the housing market. His investors think he's lost his mind. He's getting death threats. But here's what's beautiful and terrifying. The banks are so confident. They're not just selling him these bets. They're selling them to everyone. Investment banks are taking both sides of the trade. They're selling mortgage-backed securities to pension funds while simultaneously betting they'll fail. AIG, this massive insurance company, they're writing hundreds of billions in these insurance policies. They think there's no way the housing market crashes. They're collecting premiums like it's free money. They have $2 billion set aside to cover potential losses. The actual losses? $180 billion. Cracks start showing. Some mortgages are defaulting. Housing prices stop going up. Then they start going down. Bear Stearns, this 85-year-old investment bank, they have 2 hedge funds that collapse overnight. $20 billion evaporates. The CEO goes on CNBC and says everything's fine. 3 months later, Bear Stearns is sold to JP Morgan for $2 a share. It was trading at $170 the year before. June 2008, IndyMac Bank fails. The FDIC seizes it. July 2008, Fannie Mae and Freddie Mac, the 2 companies that back half of all American mortgages, they're insolvent. The government has to take them over. September 12, 2008, Lehman Brothers, $600 billion in assets. They're calling the Treasury, the Federal Reserve, begging for a bailout. September 15, 2008, 1:45 a.m., Lehman Brothers files for bankruptcy. What happens next is biblical. The money markets freeze. Companies can't make payroll. The commercial paper market, this is how businesses get short-term cash. It completely seizes up. The repo market, where banks lend to each other overnight, it stops functioning. Banks literally won't lend to other banks because nobody knows who's holding the toxic assets. The stock market falls 500 points in one day, then 700 points. The Dow loses $8 trillion in value in 2 weeks. September 18, 2008, afternoon. The Treasury Secretary and Federal Reserve Chairman tell congressional leaders that if they don't inject capital into the banking system immediately, there will be no economy on Monday. Not a recession, not a depression, no economy. ATMs stop working. Credit cards stop working. The entire financial system has 3 hours before it collapses. They pass a $700 billion bailout package. The Federal Reserve starts pumping money into banks. They're literally creating money and giving it to the same banks that caused the crisis. Bear Stearns, bought by JP Morgan with government money. Lehman Brothers, bankrupt. 28,000 people lose their jobs. Merrill Lynch, sold to Bank of America in an emergency weekend deal. AIG gets $182 billion in his hand. Bailouts. Washington Mutual, largest bank failure in U.S. history. Wachovia, forced merger with Wells Fargo. In 3 weeks, the entire landscape of American banking is redrawn. Here's what happens to ordinary people. 8.7 million jobs disappear. Unemployment hits 10%. People who've worked for 30 years are suddenly getting rejection letters from Target. 10 million people lose their homes. Not because they were reckless, because their home value dropped 40% and the bank wouldn't renegotiate. Families are living in cars. Entire neighborhoods are abandoned. Retirement accounts lose $2.8 trillion. People in their 60s who were planning to retire, they're working into their 70s now. The total destruction? Estimates range from $10 trillion to $22 trillion in lost wealth globally. But here's where it gets really good. The bankers, they get bonuses. Goldman Sachs pays out $16.7 billion in bonuses in 2009. That's an average of $500,000 per employee for the year after they got bailed out. JP Morgan, $9 billion in bonuses. One executive, literally one guy, at AIG got a $6.4 million bonus after the company lost $99 billion. When Congress asked him to give it back, he said no, because it was in his contract. The absolute audacity. And prosecutions? Criminal charges? One mid-level trader at Credit Suisse goes to jail. One person. For the largest financial crime in modern history. Here's what they don't want you to understand. 2008 wasn't a failure of the system. It was the system working exactly as designed. The banks made billions creating these toxic securities. Made billions selling them. Made billions betting against them. Then got bailed out with taxpayer money when it all collapsed. They privatized the profits and socialized the losses. They took the risks, we paid the price. And the kicker? The banks are bigger now than they were in 2008. The 5 largest banks control 47% of all banking assets in America. They were too big to fail in 2008. Now they're bigger. The Dodd-Frank Act was supposed to fix this. It's been gutted. Regulations have been rolled back. The derivatives market is larger now than it was in 2008. Michael Burry. He made $800 million betting against the housing market. His investors made billions.
Look at that!
But he spent the next 3 years being audited by the IRS 4 times. Not because he did anything illegal, because he was right. 2008 taught the banks one lesson. You can commit the largest fraud in history, destroy the global economy, ruin millions of lives, and nobody goes to jail. As long as you're rich enough, you're untouchable. That's the real story of 2008.
This is the real story.